Okay, so what if I told you that you could get paid from your investments every single week? I'm not talking about once a quarter or even once a month. I'm talking about a steady stream of cash hitting your account like clockwork. It's a really cool idea for generating consistent cash flow, and that's exactly what we're going to break down in this explainer.
Just think about it for a second. A regular payment that could literally cover your groceries for the week, or maybe your utility bill, or just your daily coffee habit. It's an awesome concept, right? It makes investing feel way less like some abstract thing and more like something that's actually connected to your day-to-day life. But is it actually possible? Can you really build a portfolio that pays you out every single week?
Well, here's the problem. Most companies, as you probably know, only pay out dividends quarterly, sometimes just annually. And that creates these big, clunky gaps in your cash flow. You get a nice payment, and then nothing for a while. So, the goal of the strategy we're about to dive into is to smooth out those peaks and valleys and turn it into a nice, steady, weekly stream of income.
So, how do we pull this off? Well, the answer is actually pretty clever. It involves finding a specific combination of stocks that don't follow that typical quarterly schedule. See, the whole foundation of this strategy is built around companies that do something different. They pay out dividends every single month.
And this is the aha moment. The real trick isn't just finding stocks that pay monthly. The secret sauce is that they all pay out on different weeks. So you find one company that pays in week 1, another that pays in week 2, a third for week 3, and a fourth for week 4. And just like that, you've basically engineered your very own personal weekly payday. Pretty smart, right? Okay, so let's get down to the nitty-gritty and look at the actual blueprint. The source material we're looking at lays out a very specific portfolio of 4 stocks, and each one was handpicked to pay out during a different week of the month. It's all designed to create that perfect, continuous cash flow.
All right, first up, for week 1, the portfolio kicks off with a solid anchor from the real estate world.
And that stock is Realty Income, ticker symbol O. Now, this company is so famous for its payment schedule that it's literally nicknamed the Monthly Dividend Company. It's a REIT, a real estate investment trust, which basically just means it owns a bunch of properties that generate income. And with a yield of 5.39%, it's got our payout for week 1 completely covered.
All right, on to week 2. For this part of the month, we're shifting gears into the world of capital investment. So our week 2 check comes from Main Street Capital, ticker MAIN. This one's a BDC, or a business development company. All that means is they invest in and help grow small and medium-sized businesses. Its annual yield is pretty similar to our first one at 5.33%, and it's our reliable player for the second week of the month. Okay, now for week 3. And this is where things start to get a little more interesting. The portfolio takes a big turn here towards a much higher potential return. Week 3 is handled by Armor Residential REIT, ticker ARR. And just look at that shift. The annual yield skyrockets to 17.55%. Wow, that is more than triple the first 2 stocks we looked at. Now, it's definitely designed to give you a much bigger payday, but as we're about to find out, that kind of huge yield always comes with a catch. And finally, to bring us home and close out the month, we have our 4th and final stock. For week 4, we've got Prospect Capital Corporation, ticker PSEC. And this one has the highest yield of the whole bunch, at an absolutely eye-watering 19.63%, paying out right near the end of the month. So there you go. 4 stocks, 4 different weeks, a complete portfolio built to hand you a dividend payment every single week.
So, you might be thinking, okay, this sounds cool. How would I actually get started? Well, the process itself is surprisingly straightforward.
Really, it's just 3 basic steps. First, you'd pick a brokerage or an investment app that lets you buy US stocks. Step 2, you'd fund your account. And step 3, you'd purchase the 4 stocks we just talked about. But, and this is a huge but, before anyone gets too excited and rushes to do that, we have to talk about the single most important part of this whole thing, the risk. Okay, I really want you to listen closely here, because this is without a doubt the most important part of this entire explainer. Those huge, massive yields we saw a second ago, they don't just appear out of thin air. It is absolutely critical that you understand the trade-off here between risk and reward. So here's the breakdown. You've got O and Main, Realty Income and Main Street Capital. These are generally considered to be pretty stable companies. You know, their yields are lower, but so is the risk that comes with them.
Then, on the other hand, you've got ARR and PSEC. They offer those absolutely massive yields for one simple reason. They are considered much, much riskier investments. Their stock prices can be incredibly volatile.
And this leads us straight to a super important warning right from the original source. And I'm quoting here. Be sure to analyze each stock yourself. Don't make a decision based on this video alone. And that is so, so true. A really high yield can often be a huge red flag, and it's absolutely essential that you do your own homework, your own deep dive research before you even think about investing your money.
Look, at the end of the day, the idea of getting a weekly dividend is super appealing, no question about it. But this particular strategy is really a high-wire balancing act. It's pitting stable, lower-yield stocks against these really volatile, high-yield ones. So the big question you have to ask yourself is this: does that specific mix of risk versus reward actually fit with your own personal financial goals? And can you stomach that level of risk? That's something only you can answer. Thanks for watching.